Hello everyone, it is Sunday, October 3rd, and this is episode 33 of Odds Are, your S&P 500 weekly market forecast. All right, last week was a fun one. Let's take a look here, see what happened last week. All right, so first thing was we said that the Parabolic SAR, the PSAR level there at 43.78, and it was very, very possible that we could close below that level and still close above the expected settlement range, right? The lower limit. And that's exactly what happened. We closed below 43.78. We went down and breached that 43.42 lower breach point as expected, and then bounced back up to close within the expected settlement range. So I'd call that a 3 for 3 on the calls last week. And now we're going to obviously get into what that means for us. We're going to pull up some numbers to refresh everybody's memory on what happens when we close below the Parabolic SAR. But before we get to that, let's take a look at the moving averages. All right, moving averages are still bearish on the short term, no surprise there, and still no budge on the medium term. Medium term is still bullish. So it's going to be interesting to see when that one finally gives up the ghost, if we continue to go down, eventually flipping over to neutral, if not going straight to bearish, if the downward move is strong enough. All right, and let's take a look at what we are expecting for next week. So this gets kind of weird because typically we have the breach points within the expected settlement range. And every once in a while, when volatility really spikes, we get that widening out, and we're actually, the breach points are outside of the settlement range, but very rarely have we seen it where one is inside and one's outside, and that's what we got this week. But hey, I don't control it. That's just, this is what it is. These are the numbers, right? So our system is telling us that there is an 81.33% chance that we will breach either 42.49 or 44.61. Now, the expected settlement range is between 42.30 and 44.26. So, obviously, if, looking at one side, if we go down, we could very easily breach 42.49 and either stay above 42.30 or poke our head down below that level and then come back up like we did last week. Or to the top side, we can go up towards 44.26, and if we breach 44.61, then that means that we would have to come back down to close below 44.26 to stay within the range. The other option is we just don't have a breach of the breach points, right? I mean, it's 81.3, right? It's not 100%. So we could very easily have a week where we don't have a breach of the breach points and we stay within the expected settlement range. Now, notice that the Parabolic SAR, right, has flipped now. So now it's on the top side of the price action, and we're at 45.48, which means that in order for us to turn back bullish, according to Parabolic SAR, then we would have to close above 45.48. It's a stretch. It's kind of outside of the range, right? But that's what it would take to kind of undo what happened last week. All right, let's put all this together now into the relative view. All right, you can see where we're at there, the blue line in the middle, and nice, we've got a ways to travel, right? So nice big wide settlement range, and the breach points are pretty far apart, and then you see that Parabolic SAR all the way up there, getting close to the top end of the Bollinger Band. So looking at this, like I said, this is one of those weeks where even though there's a 81.3% chance that we'll breach the breach point, I'm looking at this, and I think that if we do breach, it's going to be to the downside. If we breach to the top side, then I don't think we're going to have enough strength to get up to that Parabolic SAR, that PSAR level. So let's just say, even if we do have a nice V up again, if it's a buy the dip week, I still think that we'll come back down and close within the expected settlement range, so below that 44.26. All right, enough of that. Let's get into didn't see that one coming, or in this case, if you didn't see that one coming. So we've been talking about this Parabolic SAR for months now, right? And this thing has just continued to trail beneath the market, going up and up and up and up. So let's take a look and see what that actually kind of looks like. So here we go. All right, so that orange dotted line, that's the Parabolic SAR level, right? We have been in an upward move, meaning the Parabolic SAR is below the market since May of 2020. Think about that. Since May of 2020. and you could see the orange line trailing. So, pretty sweet if you would have gone long when the parabolic SAR switched to bullish and just ridden it all the way up to the top. Now, at the very top, that's where we're at. You see where the blue line, that's the market, comes down and meets and crosses that orange line. That's where we close below the parabolic SAR. And interesting, I mean, I'm not much of a chartist, but, looking at like a very, very nice head and shoulders formation there at the very top before it kind of came back down. So we're at the right end of the right shoulder for whoever, follows that. But I know there's volume to be taken into consideration. But looking at this, I mean, it was a nice run. It was a really, really nice run. We stayed on that upward move all the way up, and now the question is, how deep does this thing go down? Because we've breached that parabolic SAR. It's now going to be on the top side. And I mean, looking at some of the other times, yeah, there have been times where, the parabolic SAR flips to the top side, and then we kind of, stagnate and keep going up. I don't think this market has another big run in it. I could be wrong, but looking at since May of 2020 until now, I think we need this correction. We need something going down to kind of reset. But that's kind of what we've been looking at. But more immediately, let's take a look, see the numbers. What happens when we do breach that parabolic SAR? All right, so taking a look here on the screen. So the top chart or graph is going to be the average change. Now, the green is the average change when we flip from the parabolic SAR being in a bearish state up to a bullish state. So that's like from down to up, and that's that green bar. So altogether, we're looking at an average of 0.5% up in the week following that. And then on the downside, we have an average of minus 0.36% on weeks after we breach to the downside, which is the week we're in right now. Doesn't seem like a lot, but remember, this is just the average. There are some times where it goes down 5 or 6%, sometimes 3%, but the average is still negative here. So that's kind of the big difference between a week where we've breached up to a week where we've breached down. Now we look at the median change. That's tells a little bit different story. 0.9, so almost 1% median change when we flip from bearish to bullish, and almost 1%, so 0.83% when we flip from bullish to bearish, which again is the week that we're heading into now. So definitely a very clear bearish bias on weeks following the close below the parabolic SAR, not to mention what could lie ahead in the weeks to come. But just immediately at this week following the breach, that's what the statistics show us. All right. And then with that, we will go into the quote of the week. So this is by Mr. Phil Lorink. I hope I pronounced his name correctly. He's a future trader, and he was a guest on a podcast that I had the transcript for, and I really like this quote. It says, "Slow down and be patient. Plan the trade, then trade the plan." Now, that sounds, pretty cliche, but it really does make a huge difference, because if you don't have a plan going into the trade, then the market's just playing you. You're not. People say that it's like playing a game or going to the casino or whatever, and that's great if you're the one that's consciously making the moves and you're the one in control. But when you just go into a trade and you have no plan at all, the market's just playing you, and usually the market wins. So it's kind of not the game you want to be playing. So slow down, be patient, plan the trade. That's kind of why I like to do these on Sundays, because it gives you a chance to think about what to expect in the week to come while the market's not actually live and ticking. And hopefully you guys are be able to take this approach and say, whatever your trading system is, whatever your approach is, slow down, be patient, plan your trade, and then trade your plan. Stick to your plan, stick to your fundamentals, practice proper risk management, and that is the name of the game.